Hello and welcome. This video is going to be another buy low, sell high strategy using a totally different one from the ones that I have talked about in the past. Like always, everything within your own risk, own reward. And the ones I've talked about before, really in two basic forms. One, 18 average, when price is well below it or below it in measures and such, you buy. If you have prices above the 18 like we've seen in here, then you would sell. And so on and so forth. And that works to a great strategy. And of course, talking about just basic buy orders and sell orders. You buy something at 500 Satoshi, then maybe you put a sell order in at 700 and maybe a buy order in at 350 or whichever variable increases fits yourself. And for this game, whether you want to play for small, medium, or large volatility or for movements, it's up to you within this strategy. And I've been thinking about this for quite some time, well, maybe the last few weeks. And when you go on sites like Bittrex, what I do notice is that I usually put about the same amount on every single speculative play that I make on the buy low, sell high for an entry cost. And I see sometimes they're doing well, they're worth a bit more, they're not doing as well, they're worth less, and that should be normal and without saying. But let's just assume you like to play 0.20 Bitcoin as an entry position for a play. And of course, for everyone's position size, maybe it's larger, maybe it's smaller, but the math all works the same. So the thinking is, let's assume you buy and it's rallying, it's doing well, it goes up to 0.26 as an example. Well, now what I'm going to do is, I'm thinking, why don't I just sell 0.06 worth of it? It'll then be worth 0.2 again. And everything I want to do within my portfolio is always to have everything worth 0.2. So if it goes down to say 0.14, then I'm going to buy 0.06 worth and get it up to 0.02. So that's the general thinking. And which levels do you want to do? If it goes up to say 22 or 23% from 20. If you're looking for like 8, 10, 15% gains, you could do it this way. If you're looking for larger, I would make it so that the percentage gains works to the same as the percentage losses. But I've done a little bit of testing within it. So let me bring up a spreadsheet. I don't know which code this was. I think it was something in the, probably Blackcoin, one of my earlier ones. I just took some data. This thing was 27.29. Or now it's 37.11. So it's barely went up against Bitcoin. So what I've done with this spreadsheet is I have the price. This is 3 zeros rather, and then 27,000 Satoshi. So it's not Blackcoin then. And this is what I bought, or what I would buy to get this to 0.02. That was the whole plan. Start with this number. So what I would do here is if it got really high, and I can't remember what numbers I used for the first one, I do remember for the next two. So I'm going to go through 3 examples that I went through. I'm going to go through one that went up really well and one that went down really well within the same period of time, approximately. So in here, I would have sold 245 because it was 0.032, 245 of the 716, and then it got up to 0.03 here, so I sold 153. And then the formula will take how many I have, it'll add what I buy, subtract what I sell. This is the amount of Bitcoin that would be received for the sale. This also does work within a 25% of 1% rate. There's another sell order for 98 back in March 14th, 2017. I'd sell 110 again on June the 9th. Of course, all the markets were rallying until then. So we know after this it's going to be buy, buy, buy. And there's the first one in here on July the 7th, buying 50 because the market got, or your value got to 0.013. So you have to buy it up to 0.02. It would take about 50 to do so. So that was done. And then buying 75 more because the market went down. Then buying 120 more because the market keeps going down, August the 13th last year. And then September the 16th, you can see the portfolio 0.012, you buy 260. Price was 34,000, but then 2 days later it goes up to 67,000. So it's obviously going to mean your portfolio is higher. And then you sell. Buy 120 on September because of such. Buy 175 in October. Buy 400 in December. But then the markets rallied at the end of last year into January. So there's a sell of 340, a sell of 220, a sell of 145. And this is selling 145 of 450. This is selling a third of your stack here. Selling 340 of 1,000. Again, about a third of your stack in this situation. And when I say stack, I'm used to the poker thinking. But throwing that aside, markets go down. You buy some more. Buy some more. And I only use data up to March the 2nd. The other two codes is up to now. So I would have bought for a little under 8% of a Bitcoin. I would have received back 10%. So that's a difference of about 0.02. Plus this would be worth 0.04. So I would be up in this spot about 200% on my investment for a market that pretty much barely went up. Not bad. This is a market here that went well higher. Starting off at 1,961 Satoshi. And, or is it 19,000? That looks like there's 3 zeros. I'm using 20% for this one. And when I went through this, I decided, you know what, if it gets to 26%, that means it would be up obviously 30%. That's when I'm going to sell. If it's anything under 0.2599, I'm not selling. 0.260 and higher, I am selling. And then same thing on the buy. As long as it's under 15, or at exactly 15 is how I did it, it would be a buy. So here's a spot where the price action got up to 0.295, selling 330 of the 1,020 that I had. Now it didn't go down to 20, it went down to 23. Well, that's because the market went up the next day from 28.96 to 33.87. Day after that it goes up to 59.32. This is March the 12th, 2017. So I'd be selling 340 more, bringing it back down to 20%. And then we can see it got to 135.85 here, so I need to buy 170. And then sell 135 as the price got to the 0.26 number. And that's exactly what this is the rest of the way. So as we know the market movement, this time last year the markets were rallying really well, so we're should be seeing sell orders, although there was 2 buys in here with the markets going lower. And here's a spot where you go from April the 3rd to April the 23rd, 20 days without a trade. And that's, I'm going through more for the most part with markets being in a stall level. But you finally sell a bit, 290. A little bit of a buyback as the price was 43.36 the day you sold. It was 32.80 a handle rather on the day you bought back just a few days later. And then you buy some more at 23.70. We sold here at 3,900. This is all, it's not, I never did this per se. I'm just saying because this said 0.33. As long as it's at least 0.26, I'm selling in that spot. So there's a sell at 3,900. This is the spot where it went way higher, like tripled in one day. So you have 515, you sell most of them. 340 gone, down to 175. And then it went higher again. from the 11 handle to the 15 handle. You saw 41 this time. Not as much compared to the last one, but it's still, you're playing the game. You're getting this to stay at 0.20. Another 54 sold, another 27, down to 53 of these things after having at 1.850. Starting with 1,000. But buy back 20, buy back 27, buy back 49, another 51, and then some selling here. And we'll just scroll down to the bottom. You're getting all kinds of transactions, but here's a long spot of dry nothing, where you go from January the 8th through January the 31st without a trade. And then as at March 21st, you'd be worth 21% of a Bitcoin. After all, you're always going to be within that number within this strategy. Your net buys would work out to about 1.4 Bitcoin, a little under, and your net sells a little more than 2.2, which would be a difference of 0.8. Plus, you got the 0.2 value on what you'd be holding. So therefore, you would be up about 1 Bitcoin, starting with 0.2. That's a 5 times value. What I'm going to do is I'm going to see how much this market increased during the time. I'm going to take this number and divide it by the starting one. After all, this did go up in price. It went up 3.62. So buying and holding and not doing anything throughout that time, you didn't do as well as this particular strategy. Let's do this again with another coin. This one was in at 2,358 back on February the 19th of last year. Right now, it is at 605. So it has lost about quite a bit. And again, doing the same thing. I mean, it just worked out on the first day after you would buy on this spot. You buy like almost 8,500 to get it to 0.2, and the thing gets cut in half in one day. You buy 8,500 more. Okay. And then a few days later, you're buying 13,000 more. Well, I'm just going to scroll through these again really fast because, again, this is a number that I was looking at, and it got down below the number there. 2 days in a row, of course, is a spot you bought, but this was after a sale. Price goes from 900 to 1,600, back down to 1,100, back down to 823. So you're still able to take care of this volatility. So a decent amount of trades. We can go through periods here. This was October 8th through November the 2nd without a trade. And then again, after only one trade in that time, going from November the 2nd through December the 2nd without a trade until then. And now again, decent amounts of time without a trade. This is pretty much what the market's been like for me since I started positioning myself roughly around this time too. It's been like a lot of, oh, nothing, not much trading today, which is fine. In this case, 1.52 Bitcoin would have been purchased on the buys, and 1.67 would have been for sales. The difference is greater than 0.15, so about up about 0.35. When you consider this is worth about 19.2%, and of course the difference on this is 15%, so 34%. And you start with 0.2, so you're looking at about 160% return on a market that has got hammered. So that will be it for the spreadsheet. Again, we're just looking at any of these coins. I'm just taking a random one, because if you're buying in here, you're going to notice that, well, say on this day in here, if you bought at this line at 39.37, even 4,000, just to make the math easy, and you are worth 0.2. When you got up to this high, and it got to 5,300, that's like 30% right there. So you'd be worth about 0.26. And even though the close wasn't there, some of those prices, this is if you, okay, this is a different spreadsheet. That's where I got the data from. But if you were just to do this, go on your computer once a day, pretty much at the same time, and even doesn't matter if it is the same time or not, that's what you would get. But there'd be a lot of days like this I might have missed, because even though maybe it went from like 0.254, then it back down to 0.2, because there was a time intraday where you could have been like, yep, sell here. So a lot of the opportunities can present itself this way too. So I'm going to be thinking myself long and hard how I'm going to be adjusting my portfolio. Look at the two different strategies, mainly the one about buying below the 18 and selling above versus this one, and see which one I'd be better apt doing. But it's relatively a simple one that a monkey could do it. And no, a monkey couldn't do it, but a spreadsheet can make it very easy for you to do. And if you have, like, say, maybe whatever amount of codes and everyone has the same amount, when you sort it on a daily basis, you can see the ones that are worth buying and selling. But even with the spreadsheet, if you have one code or one coin that you want more or less exposure towards, maybe Ethereum you got 0.2 on. Maybe you have something like ArtByte, which is like 0.05. And then another one that's 0.11, or whichever it is, and each one would follow its individual rules. So that's what I've been thinking about. I'm most likely going to be transitioning into trading in such a measure. Now, furthermore, if you want to mix technical analysis within such, it can work out relatively well on top, meaning let's just assume that there's a major level, like let's say this resistance here. If you're within the day and the price action's at like 36.13 and 3,700, and you're like, oh, it's probably going to get there, then maybe even though you're supposed to sell in the numbers, you wait a bit just to get a bit more. So it all depends. And you can even do different things. Every time it goes up like 7% or down about 7%. You can just keep on buying and selling small amounts over and over and over again. They lots of different possible ideas within it, but it's a way of pretty much buying and selling without even looking at the price and charts, and it can actually do pretty well, I think, on the long-term time frame. All right, so then thank you for tuning in, and have yourself a magnificent day. Bye-bye.